Welcome back. Futures this morning indicating a mixed to lower opening. Dow Industrials down at 49 right now. The NASDAQ down 35. And the S&P lower by 6 points, extending some selling that we saw yesterday. The S&P 500 and the NASDAQ down on weakness in technology yesterday. This ahead of more retail earnings this morning. Lowe's already out with its quarterly numbers. There was a beat on earnings and revenue came in line. The stock is up better than 4% on Lowe's. We are waiting on Target any moment now. And, of course, the largest of them all is Walmart. Walmart will release its quarterly numbers tomorrow before the bell, so we've got a preview on Walmart as well. Joining me now is ER Shares CEO Joel Schulman. Joel, great to see you. What's your take on retail so far? Are you seeing investors react to the retail earnings?
Well, we're seeing a mixed bag, certainly. I mean, you mentioned a few prominent names coming out yesterday, today, and tomorrow. Stocks like Shopify, one of our holdings, international company, was up 21% post-earnings. So we're seeing some surprises to the upside, but we've got to remember within the sort of broader retail market, when we look at, for example, some of the consumer food companies, the chains, companies like Kava, dropped 20% afterwards. So it's not kind of the core retail, but sort of the broader spending by consumers is certainly mixed. It's a mixed bag out there.
Yeah, and of course we saw Home Depot, the story yesterday, also saying that it would raise some prices and that consumers are holding off on some big ticket projects.
Right. Well, we've got to remember, too, we're late August, and late August volume is down. A lot of people aren't talking about this, but trading volume is down as much as 60% for many of the names. And so when you have late August, many of the traders are vacationing, volume is low. You could see big moves both up and down based on option activity and so forth. So I wouldn't read, if you're a consumer at home and you're watching the markets and you see yesterday they were off by quite a bit, I wouldn't panic too much. I think we're going to have a strong fourth quarter, particularly as interest rate declines come in. And I think we're going to see some interest rate cuts September. There's no meeting in August, but September, October, no meeting in November and December.
Wait,
I think we're looking at rate cuts in the fall.
Rate cuts, yeah, because initially, okay. So you're expecting a rate cut beginning in September?
Yes, I believe we're going to see that. Now we're going to see some announcements coming out, from Jackson Hole this week. I think it shouldn't be any surprise that Powell's going to keep his cards close to the vest. He's not going to reveal early if he's going to cut. He'll probably have some hedging language, like we'll see, how the tariff impact is. But he's been saying that right along. One of the things we've got to recognize too, in fact, when I was with you on the jobs report just a few weeks ago, we're seeing flawed data come out, not only in jobs, but also CPI. CPI, and that's one of the things that's not being talked about. CPI has a very important statistic. We've talked about it many times in shelter. That shelter data point is about 6 months to a year stale. And so in addition to jobs reports sometimes being very much off, somewhat of a random event, as we saw the last time, CPI is another important statistic. And it's very hard for policymakers to make decisions when we've got flawed data. I mean, people are moving the markets up and down based on this data, which we later discover is flawed. And so this is a real problem that, again, President Trump has addressed. And hopefully we have, someone in that group that's going to not only fix the jobs data, which is critical to our economy and policymaking, but also our CPI, which is so important to how the Fed decides whether or not they're going to cut rates or raise rates.
We're going to get to breaking news here. Target is crossing right now. I want to get the numbers from Cheryl. Go ahead, Cheryl.
Yeah, so we did come in with a double beat on Target, a slight one. They came in at 205 on earnings per share. Estimate was for 203. 25.21 billion is the revenue numbers. Street was looking for 24.93 billion. So that is a beat. And remember, the last quarter of Target was a bit of a disaster. So the stock is down about 1.25% right now. They're making big news. They have just announced who the next CEO is going to be to succeed Brian Cornell. Michael Fidelki. He's been the COO of the company. He is he's an insider, a lifelong employee. Many had wanted somebody from the outside to take over the company because they've had some troubles. But again, they have just announced the new CEO taking over February 1st. As far as the sales pictures go, in the second quarter, sales did drop. And that is the backdrop and why the stock seems to be actually falling even further right now, Maria. The company also saying there's a lot of commentary about Fidelki and the leadership change, but they also say that they're really trying to kind of redesign and reassess the corporate structure of the company. So right now, as far as Target goes, they're saying that household essential sales were down, apparel accessory sales down. Not a great quarter overall, Maria. Comp sales, the average transaction, those were actually down too. Traffic was down. Comp sales down 1.9%. So the stock keeps going lower and lower as all of this is crossing, Maria.
Any news on pricing? You know, that obviously was one of the headlines out of Home Depot yesterday. Of course, Walmart reporting tomorrow. Cheryl, your thoughts on what you're hearing here? Target stock year to date has lost about 30% of its value. The stock is down another 8% this morning, Cheryl. Yeah. Any news on pricing and guidance for 2025?
Right now, they're talking about just execution for back to school, and they're not talking at this point where I can see anything that says that they're going to be raising prices. That could come out in the call that's going to be in the 8 o'clock hour, I believe. But at this point, no, they're not talking about raising prices. And the tariff issue has been a problem for them. They talked about it in the last quarter. But they're kind of, the commentary right now is just on the sales drop. They are saying they're maintaining their forecast. I will say that. They're maintaining their forecast. But that's not helping the stock right now. But there is no discussion right now of raising prices. Not yet, Maria.
All right. Big sell-off in Target shares this morning, losing another 10%. Joel, your thoughts on what this does for the retail space here? Are you expecting investors to react here?
No question, they're going to react again. If anything, they may overreact for the reasons I mentioned before, because trading is light. Here in late August, down 50, 60% in many cases. Now, one of the things that we like in this market, we're not as big, we're not as strong in some of these retail stocks, although we do have Shopify, globally. We're more focused on tech. We know there was a sell-off yesterday in tech. We like tech for the following reason. It's been 30, 40 years, since the spreadsheet revolution that we've seen margins expand in this manner. And we're seeing with AI, one of the things that people are not talking about is the benefits that companies are getting in terms of revenues per employee. Is a performance indicator. When you look at revenues per employee going up the way it is, so the big tech companies, it's showing greater productivity gains. And we're seeing this throughout the season for tech earnings. And so we like tech, even though yesterday there's a sell-off.
Even though the $1 trillion club took us down yesterday. Joel, great to see you. Thank you.
Yesterday.
And join us this weekend.